Hello and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of next week, let's take a quick recap of the major events of the week just gone. By and large, stock markets around the world have been rising. Now sadly, even though the violence in Ukraine is still ongoing, traders are now less fearful of the conflict as they were in either late February or early March, and in turn overall risk-on sentiment has been improving, and we've seen rallies seen in European and US stock markets. This week, the European Union, early this week, the European Union stated they're considering imposing an oil embargo on Russia. So far, no final decision has been made. There have been reports that many EU members are divided over how they should respond to Russia. But that's something that's been hanging over the markets, and by and large, we've seen it move higher in the price of oil. Now, why is all this important? The major events of next week could increase volatility in the financial markets. On Friday, we have the US non-farm payrolls report. It's likely to be the most important event of the entire week. Keep in mind, the most recent US non-farm payrolls report was very well received. The headline reading showed that 678,000 jobs were created. That was much better than the kind of 407,000 jobs that the economists were expecting. They're expecting, like I said, in the region of 400,000, maybe 410,000. It came in way better than expected. In addition to that, the unemployment rate fell to 3.8%, its lowest reading since the pandemic began. This all adds weight to the view that the US economy is improving. Keep in mind, earlier this month the Federal Reserve hiked interest rates for the first time in a number of years. In addition to that, earlier this week we've had updates from a number of US central bankers, including Jerome Powell, the head of the Federal Reserve, who indicated that the US central bank might look to increase interest rates by 50 basis points, by 0.5%, rather than the normal 25 basis points increments that the Federal Reserve typically move in. Now, traders will be looking at the up-and-coming US non-farm payrolls report and be wondering, what's this going to mean for future Federal Reserve policy? Are we going to see several more interest rate hikes this year? If we do, what size are the interest rate hikes going to be? Now, what markets could be impacted by the US non-farm payrolls report? First and foremost, I'm looking here at the US500. As you can see, it's been in a strong rally in the last few weeks. In the last few hours, the US500 has registered a new 5-week high, which really underlines how bullish the recent upward move has been. If we continue to hold above these three simple moving averages, it's likely the recent uptrend will continue. Moving higher from here, we could hit the target 45.92, and a break above that could see a target 46.00. If you take a look at the RSI, we can see it's been ever so slightly moving lower, suggesting the price bias is ever so slightly to the downside. If we do see a move lower in the S&P 500 and the US 500, support could be found at 44.52, or perhaps support could be found at 44.23. The US non-farm payrolls could impact all of the US dollar crosses, and the euro dollar has seen a lot of volatility recently as the eurozone is heavily exposed to Russian energy, so the single currency is quite tied in with the moves going on, the violence and the conflict between Russia and Ukraine. We can see here more recently the currency pair has been drifting lower. If we continue to hold below these three simple moving averages, it's likely the recent downtrend will continue. Moving lower from here, we could retest 1.0960, and a break below that could see a target at 1.0899. It's worth noting though that even though the more short-term trend has been to the downside, the more medium-term trend over the past couple of weeks has been to the upside. If we can manage to hold above this area here at 1.0960, it's possible the more medium-term upward trend will continue. A rally from here could see a target 1.1136, and a break above that could see a target 1.1232. And coming on to gold, any moves that we see in the US dollar may or may not impact the price of gold. Gold is listed in US dollars, and if you see a sharp move in either direction in the US dollar, that sometimes influences the price action of gold. Looking over the last week or so, we've seen gold move higher. In fact, in the last few hours, the last 24 hours, gold has hit a 10-day high, which really underlines how bullish the recent move has been. If you continue to hold above these three simple moving averages, it's likely the uptrend will continue. Moving higher from here, we could look at the target 1978, and a break beyond that could see a target 2009. If you take a look at the price action in the last few hours, we can see it's drifted a little lower. The RSI is moving a little lower as well, suggesting the price bias is at the downside. Support could be found, if you do see a decline in gold, support could be found from this simple moving average here, which comes into play at 1937, and a break below that could see a target at 1910. That's all for me for this video. Thank you very much.